Welcome to the Payment Shed podcast, the weekly podcast that dives into the big topics, trends, and people shaping the worlds of payments, fintech, and business leadership, with your two co-hosts, myself, Grant Evans, and Justin Hanna. Today we're joined by Steffen Vollert from Volt. You are CEO and co-founder. Please introduce yourself. Tell us a little bit about your career in payments today and your journey with Volt thus far.
Yeah, firstly, thank you very much for having me here today. It's a great pleasure. Yeah, I'm Steffen, co-founder of Volt, indeed. Actually, I've gone through quite a journey at Volt. I was initially CTO, then started building the product team, eventually became COO, also running the operations, so data onboarding. And since about Q4 last year, I've been CEO at Volt. I've been in payments for more than 10 years. I started my payments career at ADN in the very early days. There were around 150 people back then. Started in partnerships, alternative payments. I did a lot of things in the very early exciting days at ADN. It was a great school for me, where I learned a lot about point of sale, fraud prevention, regulatory. I eventually became the VP Global Expansion based in Latin America. I spent a lot of time building up the Mexican market, but also I've spent a lot of time in the US with some of the biggest merchants there, which was very exciting for me because I learned a lot about very mature enterprise merchants and how this not only geography, but also verticals impact how you need to operate your platform. Around the time of the IPO, I left to become a consultant in fintech. I wanted to see what else is out there, what else are people building, what is exciting, how does stuff really work. So I started consulting with founders in very early stages of their venture building journey. So I spent time with Ryan Breslow in the US on Bolt.com. I spent time in a fraud prevention venture, Sentinels, that was later bought by Finergo, and ended up in Poland helping to build Zen.com in the very early days, a cards acquirer, cards issuer, and processor. Up until about 6 years ago, there were three founders of Volt. We came together using the Payment Service Directive 2 and the opportunity resulting from it to build a challenger in the account-to-account space. Back then, the industry was really focused on very fragmented local, national payment instruments like Sofort in Germany, Swish in the Nordics, Blik.pay in Poland, and we started building Volt.
And real-time payments is something that's been talked about a lot in recent years. What do you think the current state of play is in the market as far as real-time payments is concerned?
I think real-time payments there, meanwhile, is a duality of real-time payments. 6 years ago, when we started building Volt, we thought, okay, real-time payments everywhere on account to account. We were almost a bit ahead of the curve back then, because if you look at the context of when we started building Volt, it was just the time when PSD2 came into effect. We were kind of in this, I would say, third phase of account to account and open banking adoption. So the first phase was like ventures building bank infrastructure. Then the second phase, ventures aggregating the infrastructure, and we wanted to be the layer on top, the productizer for the payments use case, because we thought at the end of the day, making PSD2 and account-to-account accessible to merchants, usable to merchants, and optimizing for conversion is the name of the game. So from there, we started focusing on real-time payments everywhere, initially in Europe, and we will probably get more into what we're building exactly throughout the conversation. I think in Europe, and if you put Europe into a global context, there are different kind of flavors of real-time payments and different executions, depending on the local governance of the real-time payments networks. I think you can distinguish between different types of real-time infrastructure. For instance, you have PIX created by central banks, which is a near perfect payment instrument. You have the federalized and decentralized approach here in Europe, which is a productization opportunity. Then you have Australia, where the banks teamed up to build a real-time payments platform. And each of these executions has their own little opportunities and challenges. No? So some of them are technically super optimized. Others are driven by regulation and not optimized with the merchant and the consumer friction in mind. And then the world has also moved on. It's moved from account to account to a second real-time instrument, which is called stablecoins and crypto. The question, it boils down to how real-time is real-time really. So you have, of course, account-to-account clearing guidelines in these networks, which is in Europe for SEPA Instant, faster payments like 2 to 15 seconds. And then you have stablecoins, depending on the chain, you have different timelines and you have different finalities. So real time can be anything between real time, like instant 10 seconds, up to minutes and hours.
So real time is slightly outdated when you think about it in that sense.
Exactly.
Maybe we need a new terminology. I think it's really interesting with you guys as well, and we'll obviously dive into this in more detail, but the difference in different regions that we see with A2A payments in general. You talked about Australia. It's a market I'm quite familiar with, but a lot of the banks obviously maybe work more collaboratively in that market than we've seen certainly in the UK. So that's quite an interesting one for us. And, where do you think merchants behind this are kind of running into the biggest friction points that they might see?
I think for merchants, the problems are multi-layered. So it's probably good to unpack it from the consumer perspective. So what do consumers want, right? They want trust. They want to have a frictionless checkout, a speedy, fast checkout. And that is what merchants optimize for. It's really how easy is it for the consumer to initiate the payment? How quickly do the funds arrive in the merchant account with which certainty? So it's also about consumer protection, but also merchant protection, like who is actually in charge. A good example of some of the, I think, evolving topics that I'm very following with a lot of excitement and interest is the acquisition of Vero and Ideal. So Vero wants to introduce chargebacks where the retailers actually feel it's taking away their kind of like working payment instrument and making it more complex. So what do you really optimize for? Are you optimizing for the consumer? Are you optimizing for the merchant? And where's the friction point between both of those?
I think that's quite an interesting point there as well. I think when we talk about open banking, we think sometimes about the businesses that are building the open banking products and the merchants using them, or how we think about the consumers that are using them every single day. And you mentioned there around Australia. I think that's quite an interesting point. How does it actually work real time? If you are a marketplace in Australia, you want to pay to a different country in the world, the Philippines. How would it actually work from a real time payments perspective?
Yeah, for me, it's a super interesting comparison. So when we at Volt, we promote real time payments everywhere. That's our goal. We want to be the one-stop shop, go-to player for all your needs in account to account, not only in Europe, but globally. We've explored quite a number of countries, and depending on the market, there are different challenges. Sometimes it's the domestic clearing network, sometimes it's the cross-border component that's the challenge. Here in Europe, of course, we're still in this transition phase where some banks are real-time, some are still like on SEPA batch clearing, and then some have really complex internal mechanisms. So they say they're real-time, but they're not clearing real-time. We are in the money flow, which is quite unique in open banking. So we can actually measure what the bank is really doing, and we can measure the impact for the merchant. We can help them adjust the risk appetite or adjust the bank availability on our checkout based on their business model. If you're a merchant that has high volatility in their pricing, like airline ticketing or crypto exchange, then you want quick settlement and quick finality. And we can observe this. So for instance, there are some banks that switch automatically from SEPA Instant to SEPA Batch when the transaction amount is higher because they feel they need to protect the consumer and allow them additional time. And then the path that Australia, for instance, has taken is very different. Australia is just clearing transactions in 2 to 5 seconds. Merchants love it. There's a clear price advantage for them. It's easy to integrate, easy to use, which is why Australia is one of our most exciting growth markets. For merchants, then the second challenge is, of course, like money repatriation. So our main customers are global enterprise merchants, PSPs. Typically, they have a key domicile, right, where they want to concentrate their cash pool. And then cross-border remittance becomes the main problem in many markets. Now, how do you do this effectively? How do you do this without 5 banks intermediating? And that is where the real-time fiat becomes less exciting than real-time stablecoins and crypto.
And fiat, you would say, is kind of restrictive in that sense, right? Because you're a very interesting business at Volt because you are in so many different regions and you encounter obviously different national frameworks. And it feels to me like a lot of the fiat frameworks that we encounter are built for national rather than global businesses. And that must be a frustration for you guys that you have to kind of try and unpick at Volt.
Yeah, so our hypothesis is that the whole drive and adoption of real-time fiat payment instruments, right? So if you remember, Volt is focused on payment acceptance on the checkout, treasury, and then payout settlement to the merchant. But our hypothesis is that there will be a few regional winners like Pix in Brazil, Payto in Australia, and others based out of Singapore or UPI India, right, that will eventually become dominant across the region. The question is, how quickly will that happen? Obviously, there's a question of regulatory innovation cycles and startup innovation cycles. So as a startup and founder and CEO, I need to take my venture to the country that's moving fastest, where I can innovate for my customers, where there's a business case. And in some instances, you also need to overcome the challenges with crypto, which is why in Q4 of 2025, which by the time of the release of this is probably already passed, we are launching our own stablecoin product. So payment acceptance on stablecoins on the checkout, but also treasury for stablecoins so that we can support you with money remittance. Many of our customers are outside of Europe. They want to be settled in USDC, USDT, whatever their preference is. And you've seen some examples on this. If I remember correctly, Elon Musk's Starlink was one of the first ones to overcome the cross-border challenges with stablecoins. And we see an increasing demand for this. No? Cutting out the middleman, cutting out the complexity of banks, who had really like centralized the command on this. Also, if you look at just how hard it is to build such a business, meanwhile, so TerraPay and Airwallex and Wise, they had an amazing journey in the context of the time when they started the business, because stablecoins was not as mature, it was not regulated, it was very risky to get into it because it was not clear like where do you end up with. So, but I think the world has moved on, and if you build a global real-time money moving business, you would not build this on fiat rails anymore.
Yeah.
You would connect to the local networks and then use stable coins for cross-border.
And I think, we try and unpack some of the payments jargon on this podcast, I think it's fair to say, and something maybe open banking has been culpable of, particularly like open banking payments, right? And then it becomes pay by bank and it's a little bit clearer to the consumer. We're in this, we're calling it stablecoin summer, or we were a few months ago, right?
Mm-hmm.
And it's very much a buzzword sort of vibe. I understand the benefits, but are we doing enough to educate a consumer again on, or do they even need to know? Should it just be plumbing, right? And stablecoins are just something that's helping to change the market. But we're talking about it so prevalently as an industry. Do we need to be explaining to the consumers what this transition actually means as well?
Yeah, so that's an excellent question. So I think at least two angles from this. So one is the adoption curve of account-to-account and stablecoins. So account-to-account payments were very strongly driven from the consumer angle, right? So make payments more convenient and cheaper and more affordable for the consumer and the merchant, while stablecoins is coming from the infrastructure working towards the consumer. Now you now see the enterprise and treasury adoption and all the capital flowing into the currencies to make them less volatile. So it's like almost opposite journeys, no? In many scenarios, the consumer will not even know what the processing infrastructure is. No? And you already have a convergence similar to this in cards and open banking. The consumer experience is basically 3D Secure or 2FA, which for most banks is the same experience. So under the hood, it's like indistinguishable for you as a consumer. What is the actual payment rail? The only thing you notice is that account-to-account is probably nicer because you don't have to enter your card details. And the same will ultimately also happen with stable coins. For the larger amounts in cross-border, it's probably already happening that the consumer doesn't know and probably also doesn't care how the funds are moving cross-border. And for us, the bet is that we're all about consumer adoption on the checkout, like how do people actually spend their stable coins, which we think is the ultimate next step, right? So we're in this on-ramp, off-ramp phase. We have the capital flowing into the stable coins, but ultimately consumers will be sitting on stable coins and will want to spend them. At the moment, there's still a lot of friction in the process of spending stablecoins out of your wallets, but we think that will be the ultimate end game, and the experience will probably as smooth as it is with open banking and 3D Secure. The regulator, for instance, the European EuroC, right? So the European stablecoin process will probably quite similar to an open banking experience. And we think that all the other wallet operators will work towards a similar experience as well.
And you mentioned there, I think what we're all getting to a point here is we know that when from an open banking perspective, stablecoins far more than just payouts, right? It's liquidity, it's treasury management, is actually providing a full end-to-end for businesses.
Yes, for merchants, there are a lot of benefits. We had requests if we can hold merchant funds in stable coins, because there are also tax implications, like when do you realize tax triggering events, but also just simplifies the whole administration. So for merchants, I think there are a lot of benefits in stablecoins. What we are building at Volt is quite straightforward. We believe in real time. We are almost rail agnostic. That is the destiny of us, right? We want to be rail agnostic. Whatever is real time is real time.
Coin that term, rail agnostic. I've not heard that before, but if someone said to me what a Volt doing, that's probably how I would try to explain it.
Yeah. Actually, I need to remember that term. I only came up with it right
it's
now.
Recorded, so yeah, you're fine.
So what we actually work towards is that we started as this fiat-based business because like 6 years ago, there was not much stablecoin adoption. So we had built, based on PSD2, this checkout, easy way to integrate for merchants and accept stable fiat open banking account-to-account payments on a checkout. We have then underpinned this with treasuries, so accounts, virtual IBANs. We have our own EMI licenses in Europe and the UK. And then from there, we settle merchants and also facilitate payouts. What we're doing is we replicate all of this into the stablecoin environment where with a checkbox activation, you can extend your open banking checkout, A2A checkout in any geography with stablecoin acceptance from the most common wallets. We can then receive stable coins in a wallet structure. You can do swaps, like you can do FX. You can exchange between stable coins and fiat. And then from there, we can settle and pay out to your merchants or your consumers or your merchants. And there are quite a few hard challenges that we're solving with this, and where we try to not go through the complexities of working with a lot of banks. In some markets, we do absolutely want to work with local banks to facilitate payouts and to make sure we have local licenses and regulations and all of this. But this journey is like, again, like a generational journey, like with TerraPay and others, they had to go through country by country, work with banks. But when stablecoins are already on chain, you can cater to a global marketplace, issue wallets. You don't have all this complexity. So you win in terms of speed, you win in terms of resource commitment to development engineering, and to compliance, right? Because we will be our own master of compliance, right? You just go for a local license, you operate this, but you don't have these third-party dependencies. Third-party dependencies and removing them in your journey as a startup is the most important thing. So we believe in infrastructure ownership and license ownership.
And there's an element of, bridging those fiat and crypto worlds, right? Because so many merchants are still operating on the fiat rail, if we want to put it that way, right? So is this kind of the next evolution of helping to bridge that gap?
Yeah, it's 100%. So that is exactly what we're trying to do. Again, like our hypothesis is that there's so much capital and liquidity going into crypto right now, right? So you can invest, do micro investments in a property. At some point, you sell the property, then you sit on the crypto. What do you do with it? You want to spend it, right? You want to buy a car, a watch, you want to buy a meal, right? And at the same time, you have, of course, the US treasuries, which will drive a huge fiat influx into stable coins, which is great because it stabilizes the swap and FX rates or the slippage risk and all of this. And ultimately, it will all lead to merchant adoption and consumer adoption. We want to make it easy for merchants to learn how to work with stable coins on the checkout and that take away a bit this fear, right? I think it is probably less than 1% of the population currently familiar with crypto or has a crypto wallet. And it's the same with merchants. And some of the infrastructure and the interfaces that are provided currently to merchants and consumers are probably not similar to what you are used to in a treasury function in an enterprise. So we want to make it more seamless. I think a good example there is, of course, Revolut, who have mastered this perfectly for consumers. But there is a opportunity in the treasury market as well.
What practical steps, if you were a merchant, could you take to try and bridge that gap right now from fiat to crypto?
You could call our sales team and ask
for
a demo.
That's the easy answer, is get in touch with Volt.
Okay, fair.
And I guess what risks or perceptions around, you could take crypto broadly, do you still find that merchants are voicing in that area?
I think there's an education element to it, similar to the open banking journey with consumers. You also have an element for this with merchants and stablecoin. I myself am an avid trader of cryptocurrencies. And even I notice a few distinct problems that probably for a merchant might be quite scary, right? And one is how real time is it? How fine? What is the real finality of my payment? Then if you look at slippage risk, which is sometimes far greater than the FX pricing that you experience in fiat. So you need to explain this to merchants to make it transparent to them. And you make them need to create a tool set and a product where they feel in control and where they understand what they're doing. So I think that is quite important. But also there is a concern about consumer adoption, similar to other payment instruments on the checkout. We ourselves have run an analysis on our hosted checkout that most of our merchants are using to see which type of verticals are using or offering their shoppers to pay in stablecoins or from crypto wallets already. And it turned out that there are a lot more than we thought. And that was the first observation. Obviously, it's still really limited to digital merchants, but we also see luxury retail, even automotive now adopting that on a checkout. But I think an important factor there is really this volatility of crypto itself.
Amazing. And bringing this kind of back to Volt's perspective and innovation, where do you think Volt is sitting now compared to where it has done in the past?
Yeah, we have gone through a very long journey. We always wanted to be true to account to account. Initially, we started only here in Europe, focusing on productization of payments initiation. We wanted to be this orchestration layer for account to account across Europe, working with the most relevant and best-in-class aggregators of the account to account network. We have mastered this, I would say, at the time of the Series B. So it took us 2-3 years to have really good product market fit just on a checkout. Then we also knew we need to take this extra step and be in the money flow to really understand what are the banks doing. Are they really doing what the API says? Are they cheating and just converting instant payments to batch payments and don't tell us? Is there a risk we're creating for the merchant that the bank actually processes transactions non-real time and doesn't tell us about it? So we wanted to evolve and be in control, which meant being in the money flow, because then we have the full visibility. From there, we then started offering refunds, payouts.
The Payment Shed podcast is proudly sponsored by TAMI AI, the market intelligence and lead generation platform built for sales and marketing teams who want precision, not guesswork. TAMI helps businesses identify their best fit prospects, gain deep market insights, and boost revenue growth. And it really has become the go-to solution for the payments and fintech industries. Both Justin and I have used the tool in previous organizations that we've been in, and we really can't recommend it highly enough. There's a link in the bio to click on the TAMI website and find out more about their product. You really won't regret it.
We have, meanwhile, and that will also be announced in Q4, so by the time of this podcast, already live, we have meanwhile built our own bank network for PIS across all of Europe. While we started as this payments orchestrator, we thought we actually need to become like a multi-acquirer. And that also means you need to have your own acquiring, your own bank rails, your own technical rails, your own certificates and licenses that you operate, so you can interact directly with the bank. We also wanted to be able to optimize for conversion, and similar like to cards, you want to tweak the authorization messages for specific banks to test if you can increase conversion. Conversion is our North Star, and I think if you call our merchants that have other providers live, they will testify that we are killing it with conversion.
Dare I ask how long that process took? Because that's an awful lot of connectivity.
We've taken almost 3 years to build this.
Okay.
And much of this was an incremental build. So just what happened in open banking is actually an important part of that story as well. Open banking 6-7 years ago, we actually had this lack of late birth, I would say. So we started the business in 2019, where some of the other players were much more mature. So you had Token, Ting, TrueLayer already blazing the trail with the banks, with the regulators, building infrastructure. We thought, this is a really tough battle. I don't really want to fight that, which is why we started with the productization, because we felt the real end game is productizing open banking well for a specific use case and for merchants. But then also what happened over time is that open banking in some markets enjoyed slower adoption, and some ventures had to focus. So they had to take their countries, they had to take their products. Some actually moved away from payments, did data. Some didn't do data, just did payments. So we thought, hold on. We need to be in control of what is happening here. We need to be the master of our own destiny. We need to optimize the banks that are most relevant for our merchants. We need to take tactical bets or strategic bets in some cases. For instance, we, as of October 2025, are now a license processor for iGaming in Romania, which is a really odd bet to take and something that others didn't spot. But we thought this is a really exciting bet. We know the merchants there, it's a huge potential, nobody's tackling it. So why don't we integrate the most relevant banks in Romania and experiment and see how that works? And voila, we have an amazing USP that others have completely ignored. And it also allowed us to really optimize for conversion. It allowed us to experiment and just to master our core business.
What does your split look like then in terms, because I've always seen Volt as like a very agnostic part of the payments ecosystem, but you obviously have that direct to merchant book as well. Like, how do you manage those two parts of the business effectively in terms of your B2B kind of enablement product, if you like, that allows other businesses to do what you do, but you also have your merchant division, you're saying then as well?
Yeah, so we have a very clear focus of how we had built Volt from the very beginning. We always said we want to optimize the business for global enterprise, global digital merchants, but also distribution via PSPs and partners. Volt was always supposed to be a lean and mean execution machine. We just want to deliver amazing products. That's what we want to do, right? There's obviously then also a need for some merchants who want to go direct, right? And some merchants who are very complex, who have very specific needs, where you say, okay, this I don't want to leave to a partner, this I want to own directly. And then there's also an impact on sales cycle, and what we're actually good at. Like, am I good at selling to a very big enterprise merchant where the sales cycle is 5 years? Yeah, I can do this, but are we important enough for an enterprise merchant to solely focus and engage with us, or is it better to sell via a big PSP and focus on working very deeply with a PSP? It's no secret
route to distribution, right?
Yeah, exactly. It's not a secret that we're working very closely with WorldPay and other PSPs. So we really focus on certain verticals to cater to directly, but others also via partners. And for each vertical, we kind of have like specific partners that we feel are the most relevant, the most mature, and the most innovative.
We've talked quite a lot today about some of the sort of macro shifts that take place in the, well, just globally, I guess. And you've talked about how you define your product roadmap. Obviously, you've worn lots of different hats in the business. How much do those macro shifts that we see shape your product roadmap in Volt?
Yeah, absolutely. That's a very good question. There are several dimensions in which they shape it. So I think probably the most surprising is or probably least surprising actually, is regulation, right? So regulation shapes our roadmap a lot more than I would wish.
I'm talking about the USA, but any chance are you as well?
Yeah, I can also talk about this. So I think it's a lot of what we did was also a bet, right? So open banking 6 years ago was a bet. Like, the bet was how quick adoption of the regulatory framework, frictionless execution of the banks. And that also drove us to look beyond Europe, right? So what else is out there in the big world? Which are the markets that are exciting and which are the markets in which we can succeed? And it also leads to the question, what are we good at, right? So what are we good at? What is defendable? And what do merchants actually want? So, and there's then also a conscious choice to this, right? So do you want to become a payments orchestrator that just plugs in real-time networks around the world but doesn't really have an own identity? Or do you want to shape your own identity and go into markets where you can productize, where you can innovate, where you can really make a dent and beat local competitors? I'm usually very competitive, and I always like to have a clear competitor I perceive as North Star and that I would like to exceed, which is also how we landed in Australia, because it ticked all the boxes, like a beautiful infrastructure that you can productize in. It's like very complementary to our offering in Europe. And North Star there for us is also feature parity. What I always look when we choose markets is like, can we reach feature parity with cards? Why does the national infrastructure allow us to build one-off payments through e-commerce? Does it allow us to do or to replicate the Spotify subscription experience? And can we also do something like the Uber experience, where you have a double message, authorization, and capture? And that's why we ended up in Australia, because it's the ultimate proof point for account to account and what it can do when it's done really well on infrastructure level. There are also some thoughts, of course, to take this all towards point of sale, right? It's a beautiful opportunity to execute point of sale, something many merchants in the UK ask us to do for VRP sweeping, and we didn't do it because we don't think the regulatory framework and the technology and banks are ready, but we're building all of this in Australia, and it's going to be the first full feature parity with cards market. Plus, also, we're building our global frameworks there. So, recurring framework, we're rolling out recurring payments starting in Australia, bringing them later on to Europe, really capturing the entire spectrum of account to account.
So, that POS product that you talk about, that's using an effective digital wallet that's powered by open banking, is it?
You can do a lot of exciting experiments. I'm not going to share all the breadcrumbs now, but there are a lot of exciting experiments that we continue to pursue and push forward with partners.
It's interesting, though. I mean, that is one of the big pushbacks we see. It's not just the consumer protection, but POS moves very fast now because of digital wallets, right? It's tap, don't even think about it, off you go, take your goods, right? And you have to be able to match that journey. But Australia is an interesting market for me, just purely because I feel like open banking is quite mature there in some ways, more mature than other locations. So if you're going to launch products like that, we've maybe tried to push them in markets that weren't ready for that adoption. So choosing your geo expansions very, very strategically is an important part. Again, talking of product roadmap, right? Where are you going to launch that POS product? It makes a lot of sense to look somewhere like that. Yeah,
absolutely. I mean, we are innovators, right? I don't want to be held back by factors I cannot impact, right? So if I work in a system that limits me and my speed and my will to execute, then I find a different system, right? And there are also, of course, a few false hypotheses. I remember the hype of Fed now 2-3 years ago in the US that basically evaporated, didn't go anywhere. So we really want to also build a predictable and sustainable business. So we pick these markets with caution, and we still pursue a critical path where we incrementally evolve the platform towards something much bigger, much more scalable than what we currently monetize and materialize it. Because we were always built for the long term. We were never built for a quick exit. And point of sale is, of course, an amazing proof point. It's not like the core thing we pursue. But if you put the right small pieces in place, you will end up with something really cool at the end.
Nice. So that's kind of the next kind of 3, 4, 5 years of innovation in the open banking space. Do you think there's a world where stablecoin and national rails do converge together to become one? Or do you think they will remain in separate words and realms for now?
Yeah, so obviously you have all these regulatory frameworks hitting in many nation states like US, Europe, China. Almost every major nation is working on their own stablecoin framework. It will boil down to adoption. It will boil down to technology framework, how easy it is to actually access that, how easy or complicated the regulatory framework is. For instance, if you look at MiCA here in Europe, right? So I don't know too many crypto platforms that have a MiCA license meanwhile, no? So we're late to the party. There's an international component to this. So a domestic national component, how quickly can you drive adoption? What problems does it solve? For instance, here in Europe, like the thing that excites me about European stablecoin is that I can probably build this without intermediaries, right? All the stuff that I thought we can get out of open banking, we will be able to get out of the digital euro. So recurring payments, I like subscriptions, separation of authorization and capture, so dual messaging. All of this is possible with stablecoins, and we are currently building the frameworks for all of this in Australia, agnostic for any fiat or stablecoin rail. But then the adoption, the larger adoption and wider across the world will really depend on the domestic regulators, licensing schemes, and how quickly you can move.
What do you think the impact of that will be on the schemes? What do you think their thoughts would be on that?
So I think there are payment instruments that are possibly less proven for the future, right? And therefore, who will have less space in a world where account to account and crypto stablecoins are executed well. And again, it's like not my personal opinion. It's just observing India, observing Brazil, observing Poland, observing the Netherlands. Any market where real-time account to account infrastructure was executed well, regulated well, it became the dominant payment instrument, right? And I don't see any reason why this hypothesis would be broken with card networks. Now, you, of course, can also see that some of the card networks made their acquisition bets already. I think Visa bought Tink. MasterCard has a setup, and also Amex. So all of them have a play, but it's not
Hedging their
about
bets, right? You talk about being a bit of a gambling man and choosing your next thing, right? They all kind of got something in the stable, and I feel they're kind of watching over the hedge going, okay, we'll see what
When's our
happens.
turn?
and some of them build their own infrastructure, no? So
Definitely.
again, like I'm very much a fan of decentralized innovation. So I mean, not only as entrepreneur, but also as Europeans, I want Europe to be an innovation hub. But if you look at the past decade, then Europe was always the most innovative geography for fintech, especially for payments. No? I think there is currently a breakpoint where you see the most exciting fintech ventures no longer coming out of Europe. No? So where people are starting to build them in the Middle East, starting to go into the US. And there are many factors, and I think we in Europe should very, very deeply think about what we're doing here to not scare away entrepreneurs.
Do you think, Pix and UPI I've talked about a lot, right? And they are amazing growth stories, but they also were quite opportunistic in terms of the markets that they sat in, where you had either large unbanked populations or, UPI. QR codes are very common in India, right? As a way to make a payment. I still feel like, particularly in the UK and parts of Europe, like people are a bit funny about QR codes for making sort of payments directly. But there was an element, I feel, with both of those of opportunism, which has allowed a phenomenal amount of growth in a very short amount of time. And there's not going to be loads and loads of those markets that can kind of follow suit. I think more mature payments markets in terms of, multiple payment methods, the digital wallet capabilities that we've had in the UK and Europe for years now. Like, if you were going to call one out again as someone that I think has a good crystal ball, like where do those next opportunities lie for that sort of growth?
Yeah, I think first of all, I think it's super important to mention and to congratulate the regulators in these markets to the immense courage they had to just make this happen. No? I'm sure they fought a lot of opposition in the market. No? So if you look at the price equilibrium that was in Brazil before, it was multiple percent that banks and acquirers took for payments. Now is like basically zero, right? 0.5% or what. And the adoption and the impact it had on the e-commerce environment, the consumer protection. So there you can really just heads off, right? It's amazing. Then also you mentioned actually another point I wanted to shortly get to. So the adoption also depends on how quickly you get access to the distribution channels. And that's not only partners, it's also the devices. Now, for instance, if you want to have tap to pay, which you can operate with account, you need to get on the NFC modules. No? So, and that ultimately this ecosystem, access to ecosystem and facilitating that is really the key to win. If you look at the markets and the opportunities, I've been wrong about this many times also in the whole journey, so I don't want to lean myself too much forward. But my hypothesis still stands that those geographies that solve the problem regionally to unlock corridors will be the winner.
You made a really good point there, and I think we talk about regulation and governments and a lot of these other regions where they've absolutely nailed this as a payment method. In the UK and Europe, we want to fix it. We've got the product to fix it, but we're not allowing ourselves to do it. So although we're extremely innovative and we want to make these changes, sometimes we're getting in our own way from taking that plunge, making that bet, and actually going, this is what we're going to do.
Yeah, I mean, I can only give my personal example, right? So I graduated straight out of university and landed this amazing job at ADN where I implemented PSD1. That was literally my graduation project from university. So this whole journey leading towards Volt for me has been a decade, right? And back then they were writing the draft of PSD2, and many of the problems that PSD2 was fighting with afterwards were already solved back then, but didn't make it into the regulation because the infrastructure maturity, I think, was just not there, and banks were so scared of the investment. No? So I think we need to solve the infrastructure problem, right? And the infrastructure problem can probably only be solved if you bypass the bottlenecks, right? So that is really where this is all pointing. Understanding how can you move fast? What do you need to put in place to move fast? Is this a regulation problem? Is this a people problem? Is this a technology problem? And I think that is what needs to be tackled. No? And I think especially here in Europe, we should be a little bit more bold because the world is moving at light speed and we are not.
Do you keep a good close eye on what the EPI are doing then? And obviously the Wero stuff that's arisen. Obviously you're based in Poland and they're trying to kind of amalgamate a few of these payment methods. I always talk about the the kind of free movement of people in Europe and the fundamental of that, then there should be the free movement of payment methods, as well, that kind of allow people to have easy ways to pay as they travel across Europe as Europeans. So that's been quite interesting for me to see kind of what EPI are trying to do. But it feels also for myself like that is a battle that's going to take quite a long time as well. There's a lot of countries. There's a lot of, we talked about real-time payments a lot today, but what is a real-time payment in this country versus this country and this country? And like, what does that journey actually look like for you, do you think?
Yeah, for us, the ultimate goal is to enable local real-time payment instruments wherever you are. Right? So if you're a Brazilian traveling to Australia, you should be able to pay with PIX in Australia and then still have the funds flow executed in real time. So which is why we're building this FX and swap framework for A2A and stablecoins. So if you look at the European landscape, I mean, I'm very much European, right? I'm this generation, 1987. I went to school, business school. I got all this European excitement during my business school in time in the Netherlands. I mean, sometimes I wish we were just more pragmatic in Europe, right? So, Vero and EPI also is great, right? But if you follow the journey, right, it started with let's build something amazing from scratch. Then, okay, let's see what we have, how we stitch it together. And like, okay, let's buy something else, right?
Yeah.
So, yeah, I mean, I hope they succeed, right? So I think there's a need and potential to get it done. I think they solve a lot of problems that open banking currently can't solve for, especially like this, like double message, like problem, like authorization capture, which is like 80% of e-commerce and many merchants need it. So I hope they succeed. And I hope we can overcome this fragmentation in Europe, because again, like for me as an entrepreneur, I love complexity. I love mass. Like this is my core business. Bringing order to mass and putting a price on it, this is my core business. But as a European, I wish we were just more competitive in an international environment as a European Union, because I have spent a lot of time outside of Europe, traveling, meeting merchants, seeing what other countries are doing, and they are more pragmatic, faster than us. And I don't think Europe as a continent can allow itself to continue going at this very slow
There's
pace.
always an industry that feels threatened though, isn't there? I mean, I love your example of, bringing PIX to Australia and I just want to pay that way.
Yeah.
And it circumnavigates another big industry in FX, right? Where there's a lot of money lining a lot of pockets as well. So there'll always be pushback, but I do feel like we're in such an exciting place in payments in terms of the technology, and stablecoins is a big part of this, but we have this technology now that could remove so much pain and frustration.
Yeah.
But then, and you see it when you talk about, Brazil and the regulator coming together and saying, no, this is just the way we're going to do it. Maybe it needs to be more bullishness around, in different regions, people saying the product is there, the capability is there. Let's open the doors. But whether we'll get there in the very short term, we will see.
Yeah, there are also a few entrepreneurial components to this. No? So, and just I rephrase some of the things you said, right? So there is a reality where prices and margins are compressing. There's a reality where the regulatory burden increases. There is a reality where the entrance barriers into an industry are increasing. But there's also a reality where the tech stack advancements allow you to be much leaner in the execution and much faster in the execution. No? And considering these four components, how do you enable an infrastructure that also pushes innovation? No? Because again, like even as a small startup or even as a large company, right? So how do you innovate faster than margins compress? How do you execute faster? How do you create value faster? And how do we create an environment where we can be competitive on a global scale?
Yeah, rate compression is one of the big fundamentals in all of this, isn't it? Unfortunately. But what are they compressing from in some of these? Again, Brazil, right? What was that rate compression before it got to, you say 0.5%, or there's still there's still good margin in it, right? But,
So before we wrap up, Steffen, our favourite part of the show, the shelf of shame. We would like you to be able to bring something to the payment shed and nominate something that you think should be banished forever. An ick, some may call it. What would be yours?
Yeah, I think I would like to take the consumer perspective there. So, what do you want as a consumer? You want a frictionless checkout, you want speed, you want convenience, you want security and trust. So you want the most trusted payment method on your shelf, which is real-time payments everywhere. So you want real-time, but what do you not want? What is the antithesis to real-time and inconvenience? I think it's cards.
That's a controversial one. That might be the most controversial one we've seen so
I
far.
absolutely love it, is what I would say to
I'm
that.
waiting for the next conversation. So
Yeah,
just gonna say
I'm
it.
waiting for the amount of messages you're going to get off the back of that.
I'm not sure I'm allowed to put cards on the shelf for shame.
I happily will. I will happily put cars on the shelf of shame.
Very
Thank you
good.
so much for your time, Stefan.
Thanks
Thank you
Great
very
to have
much for
you.
having me.
Thank
for
you.
coming in.
Bye-bye.